Good morning, traders. Welcome to today's market review. This is Razak at CMTrading. Today is February 16, 2016, and today is Tuesday morning. So looking at the economic calendar today, a few things coming up. Starting at 11:30 South African time, we have a GBP number coming out. It's a CPI number, consumer price index number. It's an inflationary number. So that should have some validity on the effects of the markets of the GBP. Which in turn has effect on the interest rate, so on and so forth. So it's an important number. And then at 12 p.m. South African time, we have a number coming out of the euro. It's a German ZWI number, consumer sentiment number. And then finally, we have a CAD number coming out, Canadian dollar number, coming out at 3:30 p.m. South African time, and that's a manufacturing CPI number. So, these are not major numbers, but, obviously when things get low, some of the numbers have a little bit more of an effect. So looking at the markets, we had a little bit of a sell-off, not much going on in the EURUSD in the past couple of hours, but as you can see, we hit this threshold, the upper threshold. You see, this is, when we draw support and resistance lines, there isn't like a dot on the graph that you say, okay, this is for sure resistance and this is for sure support. Okay, it's a variable number. Okay, you got to give it some weight. So over here we have resistance here at the top of the range, just below 114 here, and we hit that threshold, and now we've sold off. That's about a 200 pip sell-off, which is healthy because we went from over 500 pips over just a week and a half span. So to retrace about 200 pips is healthy. It was anticipated, and we're at that threshold. Now the question is whether or not we're going to hold this 110. I still think that we could come closer to this 110-ish level, sell off maybe a little bit below 111 on the EURUSD, and then bounce, and then just hit our new threshold, our new trading range between 110-ish, 111-ish, and 114-ish. So, that's what I anticipate in the EURUSD. I don't anticipate something major happening today and having a 300, 400 pip move in the EURUSD. But, as such, it is trading. It's trading in a range, and it does have character. Looking at gold, gold had a big sell-off also. We went from 1250-ish level to 1197. We're selling off. Now, the thing is that is it going to hold this threshold? Okay, this is actually a major threshold at 1180-ish level, I would say. So as long as it holds this line, I think we could find ourselves again in a higher trading range. Okay, we're no longer in the 1050 range. I don't think that we'll be going back there. But ultimately, you can anticipate a little bit of a bounce at 1180-ish level. So I would look to get into it at 1180 for a bounce and see where it goes from there. Now, some of the markets, the Dow Jones was closed yesterday. It was a holiday. It was President's Day yesterday, a federal holiday in the States. Banks and markets were closed yesterday. So we didn't see much action from oil. Oil bouncing up here above $30. And I think that this is the threshold. I mean, I think we're going to be between 34 and $30. I think this was an extremity of hitting $26 a barrel. But people are saying that the market's going to be between $40 and $60 a barrel for the next 10 years. That could very well be the case. As we stand right now, we had a little bit of a bounce. And again, this is not to be etched out in stone. When you're retracing from $110 here, as we saw it retrace, sell off. If it breaches $2, on the support level, that's not really a breach. Okay, you have to be able to take that into consideration with the time frame that we're dealing with. So again, I expect us to have some sort of a trading range between $34 and $30, I would say, until we prove otherwise and we break out. So, a little bit of a momentum here with oil. Let's see if it sustains it. If it doesn't, obviously, it could go back to $28 and just trade between $30 to $28, which would be a very tight range, especially for traders, to be in a $2 range for oil. We like oil to be in a $5 to $10 range in order to take some money out. Looking at the USDCAD, we're also retracing a little bit at the bottom of this threshold. We had this tremendous rally towards the end of the year. we had this correction to 137. It looks like we're correcting ourselves. We're going to be trading in this trading range, and as long as we don't breach this 137-ish level, I think we can, be trading between 138 and about 141-ish level until we see some sort of further correction. Now, the dollar has gotten weaker across the board, as we've seen. The question is how long this correction will last, and if we're just hitting a new trading range. So it's either a trend developing or a trading range, and that's what we need to decipher. So, hindsight is 2020, and we'll only know that after the fact. But if you get into positions now, in order to, at least have a pulse of what's going on in the markets, you'll be much more attuned to, taking advantage of, when the trend does follow, and you'll be able to capitalize it because you already know, okay, it's breaking out my resistance level, it's returning back to my support level. You'll be anticipating it, and you'll be ready for it. This is Razak at CMTrading. I want to wish you guys a great trading day. Thank you.